Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, July 8th, 2019, and we're just after 4:30 p.m. Central Daylight Time. You know, this week is going to be focusing on what takes place a little later in the week. Wednesday and Thursday, we get the two-day testimony in front of Congress of Chairman Powell, Fed Chairman. And what we're going to find out is his views on interest rates. So he's going to get drilled, and he's going to get drilled because in February they were talking interest rate hikes. Now, is he talking an interest rate cut? Is it an insurance cut? How slows the economy? We saw strong jobs growth, but we also saw unemployment tick up 1/10. We also have seen housing hasn't come back. There's plenty of negatives to offset that job number. The question is, does he do it now? If you look at Fed fund futures, you were seeing that they're starting to price in now a 95% chance of a rate cut for July and something like now a 1/4% chance for October. So it's all over the board. That's what you got to be careful of. And of course, that impacts the dollar, which is impacting gold. And the last trades in the gold market today were about $5 lower than this. So interesting day. Stock market down, as you can see today as well. As we go to the weekly chart of closes, you're down 1/10, so nothing you can say there. You're still in that move that you went from 1275 to 1370, and you're getting a little bit of a back off. When we go to the daily charts, it's a little more telling. You see these two spikes in the market, and then you also see that the market's been holding a pattern of higher lows right on through there. When I put this on the chart with the swing line, what shows up is the fact that you've got higher lows and you've got these higher highs. So the market is still in an uptrend if you accept that higher highs, higher lows defines a trend. But I filter that, and I filter it with moving averages. And the support for the market comes in at the 18-day average of closings. Now, there's nothing magic if it goes down there and through it, whatever. But it is an area that I call the line in the sand. And the reason I call it that is because often that's where the market falls back to or rallies up to, depending on if you're going up or down prior to that, to regain its footing. Does this market have to regain its footing? Well, traders will tell us that, but we already know about the Fed, and we know that gold was pricing in the fact that as much as a 50-point basis cut in July. What if the Fed surprises us, and the word is surprises, and doesn't cut at all? What will that do to the market? Well, it kicks up the dollar, probably. So in looking at the market, if you take out the last break low of 1388.60, the question is, where does that put you? Well, if we go back and we look at each day on this red number, you can see the market's been gaining on average about recently $3 to $4 a day, something in that neighborhood. So I'm going to expect that when we reopen at 5 tonight, this number is going to climb up over this 1388.60, and that will be the support level. Now, if you take that number out and close under the 18-day average, what you get is lower highs, lower lows under that number. So it's a big game tomorrow, a very, very important day. When I look at Bollinger Bands, other than this one run we had, we haven't been able to get back to the upper band and certainly haven't been down to the lower band in a long time. When I look at momentum, it's pointing down. So I have a market that first had what we call an embedded reading. Do you see it right through here? That's called embedded. When you lose it, it happens when the red line closes back under 80 after having been with both numbers over 80 for a minimum of several days in a row, which we certainly had. When that occurs, it often leads to price and the 18-day average coming together. Now, the quicker they come together, the steeper the break because you're coming from a top to the bottom. But when it delays itself the way that it's been doing in this manner, all it means to me is that this market, even on breaks, probably has good long-term support at that number. Hope that makes sense to you. When we go to GLD, it's the same pattern as the futures. You've got higher lows, higher highs, you have the bias up, but you have momentum pointing down. So you have divergence in the market. You also lost the embedded reading here, and you've never hit that 18-day average. So like the futures, I would not be surprised if you fall down there and sort of stall out. If the market wants to rally, fine, it's already in an uptrend, but what do you do about this divergence? That's the bothersome thing there. In GDX, you're simply overbought, working off the condition, but it's the same. See this? You had the embedded reading. You lost it and you haven't hit the 18-day average. It doesn't mean that you have to, but the odds are really high. Go back and do your own studies. That's the best way to see it for yourself. Nothing I know works every single time, but I'm looking for high probability. So once you give me a number that is a high number, and I'm not talking 50, 60, 70, I'm talking numbers that run a bit better than that, well, that's when I really take my interest to it and I look for what the probability is. So I can understand the stall in the market. We'll now see what goes on there. The gold-silver ratio, still up very, very strong. It's still showing no signs that the gold's about to lose to silver. When you look at silver, you've got a pattern of a higher high, lower low, two levels of resistance. I've got the 18 and the 100 day, but I'm not trending. To start a trend, if you take out today's low and don't take out the high again, you'd have lower highs and a lower low. Ideally, the bears would like to take out this 1491.5 because it puts into play wherever that Bollinger Band comes in tomorrow. Momentum still down, bias down, but as I said, I don't see a trend. In the copper market, remember what I just said a moment ago. I believe the 18-day average is that line in the sand. I think it's where the market decides what next. Copper had a big break, couldn't quite make it to the Bollinger Band, went back to the 18-day average of closes. Now it's trying to figure out what next. But I'm also seeing the market, any reading under 30, according to my definition, I consider oversold. So I have a market that's again oversold, failing against the 18-day average, a trendless market because I have a higher high, lower low. When I'm looking at the platinum market, you have a market that fell very hard from the lower highs that it set up. Once you took out that low, you had the lower highs. You got through the 18-day average, and today you pulled right back to it. Again, I'm going to call this market a pattern that's got a bearish pattern because you've got lower highs, lower lows, but negated because you closed over the 18-day average and momentum pointing down. Certainly not an easy chart. In the palladium, this is still the most bullish of the metals. Until you lose the embedded reading with the red line turning back under 80, I say this market still gets well supported. Now, let's assume you lose that reading. Look at how high this 18-day average has come up from the old highs that we had here. So I'd still look for support in the 1500 level, but you would be taking the punch out of the market, and it's had a heck of a punch because it's just come up since June from 1300 for all purposes to 1553. That's a heck of a run in a market. In the dollar, what you're playing is the Fed here. So the market got caught in the sense that it was at this point looking for these big interest rate breaks. That would be bearish the dollar, bullish a number of currencies against it. Then we got this day, as you can see, and this was July 1st. The world seemed to have changed on that day. We got a series of numbers that set the market off, put the market suddenly back into an uptrend. And since that point in time, the market's been fighting at first the 18-day average, and now the market has taken off. It did that on Friday on the jobs data, and today it's consolidated those gains. That's the way to look at it. But before this all happened, notice how the market went back to the 100 and the 18-day average and was fighting. You already were in an uptrend. On this close here at 96.33, you were still over both key averages. I don't think you surprised the bulls, and now the market's consolidating. It is in overbought territory. So when you look at it all, you put it together, you try to figure out, well, what next? One of the tools that I use intraday is called a pivot point. And what I'm looking for are situations where a market's gotten ahead of itself to the upside or to the downside. I tie it together with momentum, which most people do not do. Pivot points have been around a long time, and the odds are if you're using a piece of charting software, you already have it. You may not know how to use it. You may not know how to set the colors up in it, but it's probably there. And what a pivot point does is, and you set it up, how many resistance numbers above the pivot do you want? And how many support? And the idea here is you're trying to sell above the pivot to come back into the position neutral at the pivot, or buy under it to get out back there. And there's two of them. Sometimes the first one's not the best sale, but what I recommend you do is you tie them together with momentum. So I've put together a 3-part video series for you. And it shows you where I'm seeing the momentum and where it starts to turn on you. Could be an area for entry, could be an area for exit. Depends what you're doing in the market at that time. How do you find out this? It's free, folks. Just give my staff a call. You can also go to our website, www.iraepstein.com. If you're looking at this video on YouTube, you'll see an icon here. It'll take you right to our front page, and click on Pivot Point Series. What it will do is you'll fill out the form. We'll email you the link for it, and away you go. Could it be simpler? I don't think so. And while you're on that free offering, take a look at anything else you'd want. We'll make sure we get it to you. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.